Great. Hello, everybody. It's a pleasure. It seems like open banking was a bit more fussy. The open banking conference was a bit more fussy than this one, but they don't know that the good stuff is here. I have the success case from Brazil. So thank you everybody for joining us. As was mentioned, my name is Enrique Galdámez. I'm the Executive Director of Asociación Fintech de Guatemala, the Guatemalan Fintech Association. We are the organization that gathers all the actors that are transforming the financial ecosystem in Guatemala, including fintechs, banks, the regulator, and strategic partners for the fintech ecosystem and to growth in the country. We are leading the fintech track in the event. It has been a pleasure to see all the activity that Volcano Summit had this year in fintech. Just a quick data on it. The Fintech Association was born in Volcano Summit in 2018, and it has been a pleasure to come back 2 years later after the pandemic to give back to this event and get enriched from all the energy and all the amazing stuff that happens at Volcano Summit. So with that being said, I'm going to introduce our special guest of the conference, André Luiz Silva, who is COO of A55. And I would like to start, André, please, by you telling us a little bit about yourself and what does A55 do?
Sure. I'm André. Nice to meet you guys. Thanks for the opportunity. I'm André. I love soccer. That's my first slide. So I'm Brazilian. I got included. I'm from favela, and technology included me in the society. And that fact just brought my life sense because it was how it happened to me. So I can do in a different way because this is exactly what brought me here. I was quantitative trader for UBS Bank. And right after, in 2019, I decided to become entrepreneur. This is a very hard decision, especially when you work like an employee in your whole life. It's a challenge that's changed me forever. And A55, we believe that credit can provide the economic development that we have been discussing so much. The poverty trap, the growth problem on credit access to Latin America is real. I mean, 80% of population active don't have access to credit. And that means for a sector that is responsible by 99.5% of Latin America GDP, which is huge. That means that the real reality has no access to financial services. This is only for privileged and knowledge people, and A55 mission is to bring that as democratic as it can be. That's basically what we try to do.
Great. So now we'd like to talk a little bit about Brazil. Brazil is the leading ecosystem fintech in Latin America. In the most recent report done by the Inter-American Development Bank, Brazil has been positioned as the #1 ecosystem in the amount of fintechs, with more than 1,000 fintechs operating in the country. Basically, 51% of the fintechs that are operating in Latin America are Brazilian fintechs.
Yes.
So I would like you to tell us a little bit about the state of fintech in Brazil, the state of the regulatory ecosystem, and what role do you think that regulation has played in the growth of the Brazilian ecosystem on fintech?
Sure. I mean, first, every time that we hear regulation, that sounds boring. That sounds a bureaucracy problem. That sounds something that we need to solve. And that's a completely wrong mindset. Regulation brings equality. Regulation brings harmony, because there are many interests are in the same ecosystem that regulation will try to get them as closer as it is possible. So that means that with regulation and with Brazilian regulation, I will show you some numbers. But basically, Brazilian story in the last 3 years was about how regulation brought us this power of being 51% on Latin America fintechs and startups. Can you, one? Yes? My team. So I want to talk with you about 3 basic steps about what happened in Brazil, and I will show you numbers about how exponential that change can be brought to Guatemala and other Latin American countries. A small parenthesis, we started our operation in Mexico. From that experience, I could learn that Brazil itself doesn't include as a country from Latin America ecosystem. I'm the only Brazilian participant that I met in the whole event, and that's a shame. So the first step is we need to get closer. Latin America countries, ecosystems, Brazil's power and development can help you guys because I see so much of Brazil in every country that I got to meet in this 3 years adventure. So we are very similar. Think of me as your cousin because that's exactly how I feel when I see guatemaltecos, mexicanos, argentinos, lo que sea. Entonces, sorry, get back to the English. So, the first one that I want to talk about is when finally fintechs get regulated in Brazil. Okay, one more. Yeah. So it was 2017, and the Brazilian Central Bank said, okay, too much informal. Okay, just like everybody has been saying, the old panels, informality in Guatemala is an issue. Then the Brazilian Central Bank was, okay, we need to stop this, and we need to set up a fintech perspective. How does a fintech look like for everybody? And then some rules that are very basic. For you in Brazil in 2017, to establish a payment fintech, you need $200,000, but you have a 79 million users market. And that means you don't need to fund that money. You need to have the liquidity. And the market that you are accessing is a 79 million users market. It's huge. And then we have 10% every year of growth in the market. It's impressive. This happens exactly after the first as among as many to come, first regulation comes, non-stop double-digit growth, because informality always will take the place, and many technology enthusiasts talk about how informality actually helps the thing to technology to get closer, because everybody will see that as a really clear problem. That's so clear, the problem that we have. And then, the next slide, please. Then what happens? 2017, no? We have $4 billion when the regulation came out. And in the next year, we have almost a 300% growth. This is the volume in billions of dollars. So from 3, we got right after almost 9 billion, because everybody that was informal came really formal. So everybody wanted to play the game. It's a 79 million market, so why not? And then this is how you see now. It's almost 10 times the market since the regulation came up. So this is the power of regulation. You get the market. Well, 2017, we had all the technology that we have been hearing about, Instagram, Facebook, mobile phones. So what happened? Regulation. So 10 times the market development, 5 years, regulation. Next, please. So second point that I would like to point out in Brazil context, instant payment. US is replicating our instant payment system now. It's called FedNow. It stands for the Federal Reserve Bank. And they are trying to copycat us, and because they found it was really cool, okay? So what happened right after that? Regulation again. Boring. Not boring at all. Not boring at all. Actually very funny, especially for new entrepreneurs. First of all, A 14,000% increase. This is not wrong. I checked the numbers. Second aspect, instant payment in Brazil is for free. Everybody can send money to everybody for free, instantly, 24/7, for free, everybody. Then the population love it, 71%. It's an underdevelopment economy. So everybody will like that because it's free. It's really fitting the market need, fitting the economy need at the moment. Next. Okay, so the instant payment in Brazil was regulated in a very popular way. What happens? Here you have bank accounts. In Brazil, you don't have bank accounts anymore. You can send your bank details by telling people your email, your DPI, lo que sea, como your telephone number. So everybody remembers its phone. That's all I need to send you money in Brazil, your phone number, and that's all. So this is the curve of adoption and the bank account creation just right after the regulation came up. So instead of going undercover fintechs, no, everything regulated and solved by the governments and the authorities. And what happens? This is 500 million bank accounts that were created in that moment until now. So does anybody know any other bank that can open in 5 years 500 million accounts? I don't know. So the special thing about it is it's really practical because how do I send you my bank information? Swift code with a long digit line? No, my email, right? It's very popular. Everybody does use email. So next one, please. Okay, so the latest and the hottest thing that happens in Brazil, it's called the open banking regulation. So what happens? People, they will store data equally. Storing data equally, it's so cool because you don't need data translation. It's an issue for everybody, data translation. Cross-border business, cross-region business, cross-systems business, they all talk about translating data. I'm a programmer, I know the drill. So it's really harsh. What happens is open banking said, from now on, everybody in Brazil that wants to stand for a financial data should use this standard. So that was the first advantage. For better fintechs, cheaper, because if you want to start your business, all you have to do, follow the standard, and then you go. And it's fully regulated. So regulation here helped a lot in our country. The second one, in Brazil, the top 10 banks still possess 80% of the credit market. That means they will be thinking equally. That means only 20% of people that are playing the credit business can do differently from banks. So from that regulation perspective, fintechs became now able to give credit, able to provide their services. And what happens? The great impact, you have a blue ocean market. You have an 80% market. So it's huge. That's actually how we grew so fast, because it's 80% market, and that's it. And then clients' data provides us financial inclusion. Lots of people have been talking these days about education, but clients possess data, and nobody wants to educate the small and medium business with their own data. So we can predict the sales in a startup. Why not with a small business? We can predict sales and have pipeline for technology companies. So why not scale that through technology and regulation to smaller players to provide equality? So then you can include people, because open banking will provide more competitivity. You provide the same level of access. So the last panel, the guys were saying a good thing. Like, the guy will have a credit, whatever price, and that's it. How healthy would that be for his business? We don't know. But with open banking data exchange, I can know. I can understand how his cash flow will run. So this is equal, and that client doesn't need to be my client. All he gotta do, share his data. So it's a good one. And this chart, it's really mind-blowing. This is exactly happening in the same year that was regulated, okay? And what happened, you see the neobanks on the first year and in the second, and look the projection. And all of that was because open banking was regulated. It's just this fact, nothing more. The economy has these difficulties as all the Latin America countries. The same challenges, unemployment, inflation, everything. But the regulation brought the opportunity to get access to other market. That numbers are in billions of dollars. This is huge. So next. Okay, so here come the crazy facts, okay? So fintech and startup people, small guys fighting against the big guys, and we discussed this. This is not how it's gonna happen. We're gonna cooperate, we're gonna work together. And this new technology doesn't give advantages only for small players and technology companies or fintechs. That will give everybody advantages. How the big banks could profit for an instant payment that is for free. How is that possible? Because some of the revenue stream would come from this transfer fee. So what happened was the technology could enhance their operation, their branches. They didn't need that much of cost to keep their operation. So the same account owners from now on could transact and do not rely on the bank structure. So the big bank's operation actually got 50% cheaper because of distant payments. So the second fact was we did create 100,000 jobs. It's huge. We count our growth in A55 as in jobs creation. By this year, I created more than 25,000 new jobs. And why is that? Remember, 80% is controlled by the banks that will keep it. So if you put the market competitivity, they will have to lose. It's not because they're bad, it's because there's no competitivity. So regulation enhances the competitivity. So that's the brutal facts that happen. So people will just like don't consider this as an option to development. They will think as regulation always in a bureaucratic way to control, and that's not like that. So that's the Brazilian context, and you can. I hope you could understand what's happening in Brazil. So
Great. So I would like to analyze the process. We have seen through the data that you showed us through this presentation that regulation had a positive impact in Brazil ecosystem. So I would like to go step by step on the questions and the process that you went through. And I think that the first important thing that we need to discuss, I think the people might already imagine the answer, but I want you to tell us the reasons behind. Do you think that fintech should be a regulated industry? Yes, no, and why? Under what principles should we regulate if you think we have to regulate the industry?
yeah, I mean, short answers is very obvious, okay? Let's go for the long one, right? So the thing is, you have a tool that provides democracy, and that's inexorable, right? That tool is called technology. So technology won't stop anybody from doing anything, has never did, never in our history. All the technology that we did create didn't stop us from anything. So the long answer is yes, we should, because the informality will go over technology as well. It is on the offline market. So if we don't regulate, players will find a way on this ambiguous thing that this guy has been talking about to grow, which is not right for all the interests that need to get harmonized. So yes, they should be regulated, in my opinion.
Great. Now, how do we crazy technology firms or technology companies get closer to the regulator then, if we have to regulate the industry?
It's very polemic. So the thing is, fintechs, hipsters, new guy, dressing differently, big banks, suit guys, old guys, and the thing is, you have to connect both worlds. What we tried to do and what we did in Brazil was we connected both worlds. We created open banking committees, not only with the government members, but also with the central bank members and also the fintech members. So if banks, they are getting there, people from fintech and startup will help them. We have been hearing this talk about how Seed Client can help a startup. Seed Client is a large corporate bank that wants to enhance his digital performance. So yes, a great way to do is to connect both communities. It's not only about going and M&A and buying a fintech. That's not what I'm trying to say. I'm trying to say that work groups need to be created in Guatemala as well. So people that are interested can need to make a sustainable model to teach and learn from big banks, because fintechs doesn't know many regulatory stuff. And on the other side, banks would know how to efficiently, with the smallest structure, build and enhance their business. So it's a great knowledge exchange. So we did this in Brazil. We made the industry closer. So every work group, they have one big bank player, they have one regulator player, and they have at least one startup player. So when we do this, we make the same community. We make problems in common. So when the instant payment system was finally regulated, all the banks, big banks, small banks in Brazil, fintech, everybody was connected on the same release, which brings a huge revolution when we talk about transactional volume, you know? So that's how we did.
Great. And I think it's a very important message, because what I think that you're saying is that we need to create communication channels between sectors that normally don't talk. And Gabriela mentioned it in the last panel. There's a lot of ego around the industry, the financial industry. So starting to open those communication channels, it's a very important step for the industry to grow. And basically, that's what we are trying to do through communities like Fintech Guatemala. For the audience to know, we have 33 fintechs, but we also have 17 strategic partners in which banks are included, because we believe that these communication channels and the growth of the industry and the generation of financial inclusion in the country is a conversation that it's not only for fintechs, but from an ecosystem perspective, it's a conversation that most include the regulator, the banks, and the service partners in order to create an organized ecosystem that goes beyond isolated efforts, okay? So the next question would be, what are some ways in which we can regulate technology, leaving space for innovation? Because an important topic when we talk about regulation is that there is going to be more control, there is going to be more barriers, and this creates some fear in some of the actors that might be operating currently in an unregulated ecosystem. So how do we manage this? And mainly in an industry as important as technology, where they were also mentioning this on the last panel, technology goes always way beyond regulation. So how do we create this ecosystem that takes into consideration innovation in the process and leaves space for it, also generating security and clear rules for the actors in the ecosystem?
That's a great question. I think that everybody here is connected with technology, and before answering, we need to think about a context. The context is so-called the Web 3.0, okay? So far, we have been seeing like, did you see the Blue Monkey NFT? Everybody's heard of it, right? So what happens is, he said it goes beyond. And the Blue Monkey, in my personal opinion, is too far, okay? So let's think about Web 3.0 as a technology that will be implemented seriously and ethically, okay? So now we have cloud solutions. I can scale up a bank in Web 3.0 in less than 2 months because all we need to do is establish a private ledger, and that will be. So the way I see this answer is we need to use safe technology. Blockchain relies on cryptography. Blockchain relies on infinitely tested algorithms that will prove its safety. The difference is it's taking too long for the large industry to adopt. So the reason behind it makes this kind of question be so vague. I mean, how do we use technology to provide safety? We already have solutions everywhere. We've seen like cloud players trying to build up Web 3.0 stacks. And what happens when we have Web 3.0 as a cloud? The same as happened before we had the cloud. Everybody will move in. So everybody will move in an equal environment through technology. And this equal environment is safe. That's the difference. Every time we heard from new technologies, there will be always an ambiguous thought, just like you said, too far. Is it safe? Is it something that we can apply and become a law, as the guys were saying in the last panel? How safe it is and how should we implement? And that's the thing about Web3 and how I think that we should be implementing this kind of things, using it in a standard way to follow our financial systems. We have to follow our rules before moving them. We have to make sure that it is safe before we adopt something. So safety is the key, and safety is provided by technology at this standpoint. So that's what I think that will be our future for this.
Great. Thank you, Andre. And the last question that I would like to do before I open the questions to the audience, you already told us a little bit about the impact that the regulation had in Brazil as an ecosystem. But I would like you to talk a little bit about the impact that regulation had specifically in A55. After Brazil was regulated in the different areas that you were mentioning, what changes did you saw in A55? And basically the question would be, how did regulation help A55 Leapfrog?
Sure. I mean, from our experience, if you are a fintech and if you are a startup, if you are a health tech, if you're insurtech, whatever kind of technology and service do you provide, you want to get regulated. And the reason behind that is that there is a huge market for you to work on. So the reason behind of this centralization of all services, including banking, credit, bank accounts, is because people don't want to follow the standard of industry. But how can they scale their business if they don't follow the industry standards? So if you have a company, if you are a co-founder, if you are a partner, you need to pursue the regulation, because when you get regulated, then you access the market that you've been trying your whole life. Because the regulation will provide you the same rights through law to go competitive against, I don't know, maybe 30 years founded company. Guess who's gonna win, right? So yes, we should. And yes, we should follow patterns. And that's not talking about going in the same product for everybody. That has nothing to do with this. That has a really special relation with becoming part of something that's huge. Technology companies are now the new world protagonists. So we want to play real. We are serious. This is our purpose. So regulation brings this dignity so much. For us in Brazil, we got to be heard when we got regulated, because before we got into a meeting room, we knew that this guy knew us. We got audited. We got checked. It's cool because you tell people that you are going to do ethically. That's what you do. And you have to prove it as everybody. It's a social demand. Everybody that wants to use your product needs to make sure that you have healthy patterns, that you are cool, that you are under the law. So for especially for the small ones, if you're small, you really want to get regulated because that's your face says, yes, I'm small, but I'm regulated. So trust me. Yeah, I don't have like 1,000 branches in all streets, but I've run the same as the other banks, the same as other players, the same as the other insurance companies. So this is a very strategic point of view, to be honest. And then that helped me a lot to get in contact with authorities, with the government. This is, in my opinion, the real technology dignity regulation. That's what I think.
Great. Thank you, Andre. So before we end, I would like to ask if there is any question in the audience. No? Okay, great. So thank you very much, Andre, for the knowledge. I think it's a very important conversation that we need to listen from here in Guatemala. Basically, as I was mentioning 2 days ago in the Fintech meetup, Guatemala and Central America in general, it's one of the regions or parts of Latin America where there's no regulation. So we have an opportunity to learn from the different success cases that we have in the region in big ecosystems like Brazil, Colombia, and Mexico, and get enriched by those lessons and those processes. So thank you very much for your knowledge. It's been a pleasure.
Gracias.
And hope to see you around in Guatemala soon.
Soon. Gracias, chicos.